Now, the multi-step income statement, this is where we get into the details. So it highlights the components of net income. It breaks it out and displays it for us in a proper way so we can see how is the money being made, how are we expensing everything. The three most important line items, well, we have gross profit. So this is going to be our revenue minus cost of goods sold. What about income from operations? Well, what this is going to include all of our normal costs incurred, like selling costs and everything. And net income, this is going to include every cost. So maybe you have those random obscure costs, like you have a big settlement you have to pay out. So these are all costs. Everything's included in net income there. Although there are OCI items, other comprehensive income. We'll see that in our statement of comprehensive income section later on. Okay. So in the multi-step income statement, this is just breaking it out a little bit further, right? We have our operating section. So what's our operating income? Like we just saw, it's revenue minus cost of goods sold, selling and admin. How do you make your money? This is how you make your core money, your operating income. Your non-operating section, this is if Apple's disposing of their land and their equipment. These are your gains and losses. Broken out separately, right? Because maybe someone really wants to know how they're doing operationally, but they don't really care about these because these are one-time actions. They don't reflect how the company's really doing. Income tax, pretty self-explanatory right there. That's just going to display what you owe or what you've paid. Irregular items, we will see discontinued operations in a bit, but let's say, I'll talk about this a little bit now, actually. I think it's a good time for it. This would be, all right, if you are McDonald's and you open up McDonald's in, let's say, India, and then let's say it's not doing well. McDonald's India is not doing well for whatever reason, just different dietary interests. So then you close McDonald's India, you close that branch, that whole extra arm or that subsidiary of the company. Well, that's now considered a discontinued operation. So the profits and losses are going to be displayed here separately. Even though those are operating profits, you're going to separately display them in discontinued operations because we know we're not going to get that next year. And people want to know, okay, like, are you closing up shop in a bunch of your branches or your arms of your company? Well, it's important. So maybe someone would look at the discontinued operations of the income statement. And then extraordinary items, similar to discontinued operations. These are just items that are not going to regularly affect. So we will see the terms unusual and infrequent. If something is unusual and infrequent, we will include them here. So if we have a warehouse burning down, which is super unusual and super infrequent, maybe it's the only time it's ever happened, we'll include this loss here in the irregular items. Next, we've got net items. Not really going to talk about that. Nothing too important there. And lastly, earnings per share. This is an important metric, right? Because a solid EPS is great for investors. They want to know how much money they're making, earnings, net income per shares. So how much net income is earned per share of the company. We want to make sure that we're investing in a profitable company that has a high EPS ratio. Let's check out a multi-step income statement now. Well, this multi-step income statement is going to have our broken out everything, right? So sales revenue before, we just saw sales revenue, but what is net sales? Well, let's say we're Best Buy, or in this case, Harbor Corporation. We made $960,000. However, maybe some customers returned some goods. That's fine. That's allowed, as long as it's part of the policy. So they returned $24,000. Also, let's say you gave maybe $16,000 worth of sales discounts to employees or to customers, whoever, for whatever reason. Not important, but that would also reduce your revenue. So your net revenue now is minus 40, right? Those two together make 40. Now you have net revenue of $920,000. Net sales. All right. Now, cost of goods sold. That's pretty straightforward. It's just displayed like that. You'll calculate that in BEC. You'll have a good time with that for sure. I know I always do. And, well, what's your gross profit? Here's a formula to memorize gross profit. I mean, it's part of the income statement, right? It's something that questions may ask you. So 920 minus 632 gets you a gross profit of $288,000. And then what are our operating expenses? These are all pretty normal, common expenses you would see in a business, right? You need to pay people, you need to pay for utilities, you got to advertise, You depreciate your assets, you ship things, and you insure those goods. All right. So here, this is going to give us total operating expenses of 280, sorry, 228. Little mix up there. See, just like on the test, these numbers are similar, but don't let them mess with your head too much. That is going to give us a total net income of 288 minus 228, which is $60,000.